Hey everyone, thank you so much for joining us on the Think Realty podcast, video podcast. We're so excited to have you. As you can see, I'm not Avi Golhar. Avi's our normal host, but I'm the president, founder, CEO of Think Realty. And every once in a while, they let me out of my office to come and to interview some great guests. And so that's what we've got for you today is an amazing guest that I have heard so much about. Haven't got the chance to spend a lot of time with him, but I've seen him around the IMN conferences and various other places, and a lot of my good friends speak very highly of him. So we'll get to hear more about him, and I'll introduce him in just a second. But before that, let me say a quick thank you to our podcast sponsor, which is Real Property Management, RPG. And they're one of the largest residential property management franchises in North America. They manage tens of thousands of properties for individuals, investors, and institutions. You can learn more at realpropertymanagement.com. That's realpropertymanagement.com. Or call them at 888-806-7088. That's 888-806-7088 if you're in need of property management for some of your portfolio. Make sure you reach out to realpropertymanagement.com and get a quote and support them for supporting us. They make this show possible. So thank you so much to them. I've got a great guest for you today. If you are a passive investor or if you're just a real estate investor that's looking to scale or for new opportunity, I'm excited to have this guest on the show with us today. Our guest today is Jared Garfield. He has ROI Turnkey. He also has a great coaching program to help passive investors find strategic ways to invest and understand the market. So, Jared, are you with us? All right.
Yes, Eddie. Hey, it's good to be with you. I'm here in Cleveland, Ohio today for a real estate mastermind, and glad to have you on. Glad to be on your show today. Thanks for having me.
Absolutely. And we were talking a little bit before we got on the interview here, and you were telling me a little bit about your experience. But for our listeners, why don't you just kind of explain your journey into real estate, your background a little bit, and then we'll get into more of your company and what you provide and what you offer.
When I was in my early 20s, I picked up Carlton Sheets Buy Properties with No Money Down course, and they wanted like $4,000 for the coaching. I think I paid $79 and got all of it and started reading and studying. And I figured, for $79, what have I got to lose? I'm sure I can learn something of value for $79. So I started buying houses and renovating houses, got my real estate broker's license, and opened up a brokerage. Me and some friends actually had the franchise rights for Exit Realty for Utah and sold all the franchises out on that. Some good friends of mine and I did some training there. And we started amassing a real estate portfolio across 3 or 4 different states while I was doing that in the early 2000s. So I started real estate investing in 1999, made about $45,000 on my first flip, and just fell in love with real estate.
That's awesome. It's amazing how many times I ask people that question. And Carlton Sheets is the central cog. Especially people that really were looking at investing opportunities in the 80s and 90s. It's like he was the entryway in for sure.
So Eddie, what you're saying is especially for old people like me.
Hey, old people in this industry are hard to come by. Anybody with, I just get amazed by anybody that says they've had experience, before 2007, 2008. Those are the people we need to be listening to, and it sounds like that's you for sure.
Well, thank you. So it's been a fun ride. So after that, I went to work with Robert Kiyosaki with Rich Dad Poor Dad and did a lot of training for him. Opened up bus tours and partnered on bus tours with some of the guys from Dean Graciosi, from Flip This House and Flipping Vegas. Just did a lot of stuff with them. We even sold a lot of properties to Donald Trump's investment groups. And so that was kind of fun. It was enjoyable. And after that, we sold about 70 million in turnkey properties to institutional investors in the Atlanta market. And then most recently, we've been going into some of the hottest cash flow markets in the country. We have a spreadsheet that analyzes 278 markets across the country and tells you which markets have the best cash flow, the best cap rates, cash on cash return, and that kind of thing.
Yeah, that's awesome. So many of our listeners and people that come to our conferences have switched from an active investment role to a passive investment role. A lot of times it's because of the inventory in their own marketplaces. So investors that were heavily investing in Atlanta or Dallas or even the West Coast now are really taking more of a passive role. And and I'm seeing a lot of my friends jump in there. I am as well. I'm more of a passive investor, investing outside of the states that I live in. So, you have provided some teaching and some education specifically for those people and helping them understand. Can you kind of walk us through what your educational process is that kind of leads into the turnkey opportunities you have?
So we offer priority access to our clients that are working with us in our coaching program. They get to view the hottest properties about 48 hours before anybody else, and the properties are just amazing. For instance, from a property standpoint, we've done about 70 deals in the last 2 months, and of those 70 deals, we have 2,006 homes that we sold for $125,000, rent for $1,250 a month. Four-sided brick sometimes. Just did a duplex built in 1996 for $150,000 that came with 1.2 acres. We have a free building lot to build another fourplex there that came with it. Picked it up for $150, brings in $1,800 a month in rent. So what we do is we have a 5-week process that really prepares investors to be able to have success. Because the first thing you have to understand is, where is your market in the market cycles? Is it an expansion or equilibrium, decline, or absorption? And when is it going to change from one cycle to the next? So we start talking a lot about market cycles and how to choose when to get into the right market, when to get out, how long to hold on a particular market, what are the economic indicators. After that, we like to talk about neighborhood selection and asset selection. What types of assets are you interested in holding? A assets that are going to have better quality tenants, keep them there longer, have lower maintenance and better appreciation, but lower cash flow. Or C plus assets that'll have incredibly high cash flow, and you can get into them cheap with a very low barrier to entry and less down payment, but they might have a little more maintenance or a slightly higher vacancy and have less appreciation, better cash flow. You have to decide, or is it a mixture or somewhere in between? So choosing the asset class, how to negotiate the asset, what to expect during the due diligence, how to interview and put together the right team and have the right property managers and knowing what to ask them. And then eventually the exit strategy. What are the tax advantages? What type of legal entity should I own? All of that type of stuff we cover intensively for 5 weeks.
That's awesome. And, I've seen a lot of people teaching and training on being an active investor, finding out how to wholesale, how to flip, how to buy and hold. But I see very few programs that are geared more towards the passive investor to make sure that they're protected and understand how to really be a passive investor. I know myself, some of the biggest issues I face as a passive investor investing out of state are property management and are making sure that my asset is set up correctly from a liability standpoint. And so the fact that you address all those is a really huge value to those that are maybe leaving the active investing space where they're very hands-on into this passive space where they've got to make sure that their due diligence and all the things that you're expressing are right on target so that they're reaching their ultimate return goals, which is great. And so I appreciate that you offer that. That's huge. And then,
Well,
go ahead.
I would say I would add that I'm not sure that there's anything such thing as completely passive
Sure.
income. If you really want to be successful as a real estate investor, there's active investing, and then there's more passive. It can be pretty passive,
Sure.
but you still have to know how to interview the right teams. You
Right.
still have to be able to know how to check on the property manager. One of my early mentors said that if you don't inspect, don't expect.
Right.
So you have to at least be able to investigate your teams. You've got to be able to, inspect what's going on, check your reports, have conversations with your property managers and your acquisition specialists and different things like that. And then from a construction standpoint, you've got to be able to know, well, am I comparing apples to apples? If both assets are selling for $110,000 and the pro forma looks the same, how do I know
Sure.
what renovation went into it, right? So it's comparing the pro formas and making sure that you've got real detailed inspections and you're comparing apples to apples. Demographically, a lot of people come to me and say, well, Jared, I'm looking at buying something in Detroit or I'm looking at Huntsville, Alabama. And the provider there tells me that this is a B plus asset. They only sell B plus assets.
Mm-hmm.
Well, then I go to the demographics. And it's like, well, if the median income's 26,000 and the crime's 5 times the national average, it's probably not a B plus asset.
Right.
If it's a $75,000 income with crime, 1/2 the national average and median incomes of 75,000 and eight rated schools, it probably is a B class asset. So
Right.
you can't get just enamored with pro formas and percentages. You've got to know a lot about the economy, the community, the schools, demographics, the poverty levels. Those are the kinds of things we like to train investors to look for. So you're comparing apples to apples.
Sure, that's so true, and you're absolutely right. The nomenclature passive investor is probably incorrect. I would agree with you completely. Even though I consider myself a passive investor, the amount of due diligence I go through, and really it's a shifting of your focus. It's a shifting of your focus of holding people accountable. It's doing all the due diligence, and then it's more of making sure that you're holding someone accountable. It really replicates more of my life as a CEO of multiple corporations. I set my process up in place, and then I have my key metrics and indicators that I'm watching to make sure that everything is performing as I expected it to perform, and correcting it when it's not, right? And so it sounds like that's kind of the process you're helping them go through.
I think so. I mean, you're still having conversations and meetings with your operations managers and your marketing managers and all of that type of your HR managers. Same thing here. We want to build you a team where you can have conversations with the right property manager, conversation with the acquisition team. We want you to learn enough that you know what I know. I've got over 8 hours of video training. There's over 52 videos, and I spend an hour each week on the phone with our clients going over all the details, answering their questions. There's homework, there's assignments, there's case studies, because ultimately you don't have to do the work. I can do the work for you.
Sure.
But it helps you a lot if you can be the co-creator of the asset. You have some ownership and understanding the different asset classes and how they perform differently. So ultimately, you're making the right decision of what's right for your portfolio with my help and my advice, and me doing most of the legwork. And I think that's the key difference.
Yeah, that makes sense. And that's awesome. So, I mean, obviously, with somebody doing as much volume as you're doing, you must have a grasp on the kind of national marketplace. And so where do you see, where are the hot spots in the country? I mean, obviously, you mentioned like 70 deals in Alabama. I'm curious about the market you're in Alabama. I live in Atlanta, so Alabama's a close drive for me. I'm always interested in anything that's, in proximity to Atlanta. But sounds like you're in Cleveland right now. So what markets are you in? Where are those hot places that you're at? And then any thoughts you have on the kind of national economy, I'd be very interested to hear.
Well, so a lot of times we came back and started doing Atlanta in 2008, 9, and 10 because we were helping our clients get 2007, 2005, 1990s homes for $35,000 to $50,000 in solid neighborhoods with decent schools. And literally, they needed cosmetics. So we would be all in. We'd had $10,000 worth of cosmetic repairs, paint, carpet, and the houses were so new. That's all they needed. And I now have clients that made $1 million with me off of 6 acquisitions that they bought 10 years ago. And just by holding the properties, they made $1 million over a 8-9 year period, just off of the appreciation and the cash flow off of 6 assets. And so it's all about getting into the market at the right time. Now, I'm not saying we're going to have another collapse like we did in 2008. But what I am saying is there are markets today across the country that actually started their crash way later than other markets. Like Chicago, for instance, has great cash flow. It started this crash about 3 or 4 years later than the rest of the country. Pittsburgh actually didn't crash when everybody else was crashing because they had crashed when all the steel plants started closing down. And it took them 15 years to start bringing in high-tech companies and changing their employment base. So they actually weren't crashing. They were actually appreciating when most of the country was going down. You've got to be able to know that and understand those markets. And so we analyze that data first. So Huntsville's great because it started crashing about 4 years after everyone else, and it hasn't recovered as much. And the prices were so much cheaper to begin with because they hadn't appreciated to the peak that everybody else had. And so you can get really, really good cash flow. Paying close attention to property taxes is a big deal because if you're in a state that's number 49 for property taxes, you could buy a $120,000 house that rents for $1,250 a month. But if your tax burden is only $400 or $500 a year versus $2,300 a year in a different market where the price might be about the same, it makes a big difference in your cash flow. So as far as hot markets right now, we love Huntsville, Montgomery. There's a lot of markets that we're doing stuff in. Cleveland's a good market. There's a lot of resurgence in a lot of the Rust Belt downtowns where the millennials are moving back in.
Sure.
Detroit has some hot spots. There's areas to be careful of. Zip code wise, you got to have boots on the ground and stuff like that. Make sure you're using people who really will provide good things. Florida has some great markets. Oklahoma, does some really well things. The South right now is hot. Spartanburg, Greenville, Charlotte, North Carolina. There's a lot of great markets. Yesterday, I spent a whole day in South Bend, Indiana. Purdue University has a Polytechnic Institute there. You've got Notre Dame. You've got St. Mary's. You've got
Sure.
some really big things going on there. And the mayor, who's running for president right now, has done a lot with that town. They've really cleaned it up. And I looked at houses that you can buy in decent C-plus neighborhoods for $18,000, put $30,000 in, and you have a brand new house.
Wow.
You're in it for 48. Maybe you can buy it for 60 or 65, through us, and it rents for $950 a month.
Wow.
And so the returns can be tremendous. And it's just about identifying where those markets are, knowing where they are in the cycle, and being able to get in and really ride the appreciation up, because a city's doing a lot of revitalization, and you're buying in that opportunity zone where there's huge tax advantages and a lot of economic incentive to invest.
Sure. Yeah, that's great. That's awesome. Are you focused on opportunity zone, locations? I mean, is that one of the hot topics that you have, and where a lot of investors are coming to you going, hey, can you find me deals in the OZ?
We love opportunity zones. The government's been changing and clarifying some of the rules and the guidelines. It's not necessarily for everyone, but if you've done a 1031 exchange and you're, say, a California investor and you've got $500,000 from an exchange, an opportunity zone could be a huge advantage, especially if you go into a city like South Bend, because you've got to put double the money in of what your acquisition is. So if you buy a house for $18,000, it's really easy putting $30,000 in to be able to meet those rules. But the key is I love that this is revitalizing inner cities, but I'm not interested in going into inner city ghettos and being the pioneer that gets the arrows. I want to go into revitalizing, gentrifying areas that might have been a little tougher in the past, but where there's really good positive momentum, and you want to be in the path of growth. Yeah. So we do try and help people get into opportunity zones if you can be in the path of growth where it's really growing and booming.
Sure, and that's really important. And we've talked a lot about opportunity zones at Think Realty, and obviously we're still having regulatory issues, and so we still don't know firm, context around, the rules, and it seems to be changing every day. I was talking to a California investor yesterday, who has money, capital sitting there waiting, ready. But we'll see. I mean, I know it's a hot topic, but like you said, there's also landmines, and these landmines could be detrimental, and that is if you take your eye off the ball, which are these appreciating, cash flowing assets, and now you're going after something a little bit different. The whole city of Baltimore is under the Opportunity Zone umbrella, and it's like, but I mean, how many people want to invest, in certain areas of Baltimore? So knowing somebody like you who's got a grasp on the national marketplace is really important if your goal is to take some of that 1031 money and push it towards the opportunity zone. So, Jared, how can people get a hold of you, and how can they follow you and interact with you? I mean, obviously you've brought a wealth of information. I'm sure there's a lot of people here that would be very interested in the coaching, mentoring side of what you do, but then also a lot of people that are just looking for cash flowing, appreciating assets. So kind of tell us how to get involved in your world and get into your ecosystem so that they can interact with you.
Well, the first thing is I'd love to talk to any investor one-on-one, spend some time, find out about your goals. What are you trying to accomplish? How much appreciation are you looking for? What's your passive income goal? And what's your target date to be able to get out of the rat race and to be able to live off of passive income? And let's reverse engineer a personal plan to be able to see if we could say, could we cover your mortgage be your first goal? And then, let's see if maybe in 5 years, we could cover half of your monthly expenses. And maybe in 10 years, you could be living fully off of passive income. So I'd like to spend time with people one-on-one. But the first thing is, if you'd like to get a copy of my report, we did a advertisement in Think Realty a couple of months back. If you go to Jared Garfield, Jared, Garfield like the president, I don't know if it's / report. We've got a report that gives the 20 top investment markets in the United States and gives a lot of fundamental reasons on the economics of why these markets are so outstanding. We also tell you, I think, the 10 markets that we recommend avoiding right now that we think are past their prime, where you can see dips more quickly, or where the crime and the negative economic factors are so bad that it doesn't matter how cheap the deal is, because there's a difference between cheap price, high pro forma on paper, and what you actually get in reality, and how an asset performs. And so we want to help you to avoid that. But yeah, go to jaredgarfield.com/report. I'd love to give you that 28-page booklet of information that will be valuable. You can check out ROI for return on investment, turnkeyproperties.com as well, and get an example of nearly 1,000 properties we've done in Atlanta, Kansas City, different parts of the country. We'd love to let you see that and talk about how that can perform for you once we know your goals.
Very cool. Yeah, I'm actually right now on it, and it's jaredgarfield.com/report, and you can pull that up. I'm actually looking at it right now on my iPad. But yeah, very cool. I think that that's awesome. That's a great first start. That report that he's talking about, I know we featured on Think Realty, and so that's awesome. And make sure you take advantage of people like Jared. I mean, obviously, somebody has done as many deals as he has done can really help you in this journey. And real estate investing is a journey. We talk about that all the time. It's a pathway to get to time, wealth, purpose, whatever your ultimate goal is. But real estate's a vehicle like none other, and that's why we have Think Realty. Is we believe everybody should consider real estate as an income vehicle, an income generator, a wealth generator that has more upside than just about any other investment vehicle out there. And so, make sure you talk to Jared. Thank you so much, Jared, for coming on the show today. I really appreciate it. I appreciate your wealth of knowledge. Appreciate the service that you provide to our industry. Guys like you make our industry what it should be, and I appreciate it. And I thank you so much for your time and your willingness to come on today.
Eddie, thanks for having me. It's been a blast. I've really enjoyed it. And, I think even if you're not ready to invest in something, sometimes you need 6 months to learn. We've got a podcast on iTunes called ROI Wealth Watch. Listen to that. Jump in, read the Think Realty articles. We do a lot of articles for you guys. And I just think that starting out and learning, that's a great place. Start learning first. Absolutely.
Absolutely. Start with knowledge first, right? And then the rest will come. Very good. Thank you so much, Jared. I am going to jump in and just say one more quick thank you to Norada Real Estate Investments. They're your premier source for cash flow investment properties. Go visit my buddy Marco Santarelli at turnkeyrealestateinvestments.com, turnkeyrealestateinvestments.com. Thank you so much for joining us. Make sure you get in on the conversation. Join us by social. Let us know your questions, your thoughts, your ideas. Tell us what guests you want. And make sure you connect with Jared. Go follow him on social. Go to his website. Download that report he's talking about. Consider his education and check him out. I mean, you owe it to yourself to go find out if what he's talking about fits what your goals ultimately are. And I can definitely say that he's been well known in our industry for a long time. He's a credible source, and you can trust going to his site and seeing what he has to offer. Thank you so much to all of our sponsors. Again, thank you to Real Property Management and all that they give to us, and thank you so much. Have a great day, and make sure you join the conversation.